Hello, this is Doug. I'm back with you. This is part two of, a video I'm doing for Forex for a thread that I placed in Forex Factory. I said earlier has received a little bit of attention, and where I left off, I created these trend lines and pivot point lines on this chart. I started this chart as a monthly chart, and then I took it to a weekly, then down to a daily, then a 4 hour, 1 hour, and then all the way down to the 15-minute. Let's go ahead and do a quick review of what I actually did. You know, there's something else I forgot to do that I didn't do, and I'm going to do it right now. I'm doing this here on the daily. I'm going to go ahead and just draw some fibs. That's correct. These fib lines are green because that means that if price was to hit these areas, it would go up, and it did. It hit between the 38.2 and the 50%. This isn't really hindsight. I mean, this is obviously a swing low to the swing high, and that's it. This would be a fib, 38.2, 50%. So this is like in between, and obviously price did react. You know what? I said earlier that this doesn't look like a fib, and it really doesn't look like a fib. But some people might regard it as a fib, so maybe I should go ahead and put a fib. This is fib where price would actually cause it to fall. Or I'm sorry, this is a fib where that would cause price to fall, so I make them red. Because in trading, basically red means down and green means up. I'm going to switch this now to actually, it wasn't a bad idea to actually put that fib after all. This could be construed as a true fib. The way it just taken off, when it breaks the 61.8, I almost assume it's gonna break the 78.6. So I really think that this is just gonna keep going and going and going. I think we're in a new uptrend. This is the euro-dollar pair, and up means euro strength and dollar weakness. Well, it's not that the euro is weak, is strong. The dollar is weak, and the dollar's just going to keep getting weaker. All right, now switch down to 1 hour. Okay, I really don't see any more fibs. I'm going to pause this video for 1 second. Okay. I had to do a brief pause for a second. Now I'm back. Real quick, let's see. I could probably also put a trend line right about like this. You never have enough trend lines. Okay, now I'm going to add moving averages. All my moving averages are very easy because they're all exponential. So what I'm going to do is going to go to moving averages, and first one is going to be a 233, and I'm going to explain why it's a 233. All my moving averages, like I said, are exponential, and they're all applied to the close. So you're not going to have to vary your settings from one moving average to the other. Some people use a combination of exponentials and simples, and some people use a combination of closed settings or open. But for me, this is all based on exponential, and they're all exponential, and it's all based on the close. So here's your 233. I got that code in the line. Now I'm going to do my 144, and that's going to be in brown. Where's Brown? Where did Brown go? Where is Brown? Okay, here we go. Brown. 144. These two moving averages work together. Oh, 233 and the 144. I'll get deeper into that in just a few moments here. Now I'm going to create a 55. And that's going to be in blue. Create the 21, and that's going to be in red. By the way, I'm new at doing videos. It's a whole new thing, and I do get a little stage fright. By nature, I'm a pretty shy guy. I hope my videos will, they'll get better and better as I do more and more. Doing videos is very new to me. I'm going to do, this is going to be my 13 now. I'm going to do a 13, and I'm going to color that in yellow. And my last one will be my 5. And that will be in spring green. I used to use Bollinger Bands, but I really don't anymore. They just cloud up my chart, and they don't really tell me anything that I don't already know. But if I used to use bands, and if I did use bands, they would look like this. But look at that mess, and I really don't need these bands to tell me that there's volatility in the market, and I think they just make a total mess of the chart, so I don't even need them. I don't even use them. Basically, these are the only indicators that you're going to really see on the chart that are stationary. In other words, there will always be these moving averages on my charts. And then the only other indicators are obviously the only other indicators you're going to really see is this. These are the pivot points, the weekly and the daily, and Fibonacci. That's it. So as you can see here, we're looking at a semi-naked chart. The only thing, naked chart means no indicators, no oscillators. If you added out, if I added oscillators, the chart would look something like. Well, you know what? Instead of adding an oscillator to this chart, I'm going to show you a chart with an oscillator. Let's go to the euro dollar. I used to use these, but I don't use them anymore. It's my old method. It's actually the boot camp method. As you can see here, I have oscillators. This is a stochastics and a MACD, and these are the Bollinger Bands that I just showed you. And these are moving averages. They don't have the same settings as the other ones. But anyway, you can't really work with this chart as well as you can work with this one here, because with all those oscillators in the way, it's really hard to concentrate on price action. And oscillators are lagging indicators by nature, and they're going to tell you what happened after it happened, after the fact. So here we got our chart. It's totally made. It's the way we want it. There's something I forgot to add. One more thing. Put the period separators here for a second. And now I'm going to add 2 more lines. I'm going to color them orange. Okay. And now this is going to go here, because that's Friday's high, as you can see. I'm going to do another one, and that's going to go here. That's Friday's low. Okay. And that's it. We got all the lines we need. And This chart is totally built, and we're already up to 10 minutes, so I have a funny feeling I'm going to end up doing a part 3 because I want to teach you how to trade with this chart. As you can see, we got our trend line. This trend line was born from this candle to this candle and this candle, and we just kept it going. And as you can see, it was respected here. It was somewhat respected here. It poked through it and went back up and came back down, and it's still above the trend line, and there's a good chance that when it comes back down, it's going to bounce back up. But now I want to talk to you about Fibonacci. What we're going to do from here on out is we're just going to do Fibs. You cannot trade without Fibs. This is a fib that would cause price to go up, so I'm going to make it green. So price came down. It came to the 50, almost to the 50% fib, and here's the trend line, and here is the 144 moving average. So it touched that. This is called confluence. You have 3 different reasons why price would bounce. Trend line, 144, and 50% fib. Great area to take a long. I probably did take a long on this at one point, and if I saw a trade set up like this, I would definitely enter a long. Let's go ahead and move that fib over. Same thing here. Here's another trade opportunity. 50% fib overlapped with the 21 EMA, overlapped with a trend line right here. Another great area to take along, and you would have taken along here, and 44.52, approximately 44.50 something. That would have went to 45.18. Would have been a 70 pip trade. If you entered a trade like this, you probably would have set your stop loss right about here, just under the 78.6 and under the blue 55 EMA, because this area would have served as dynamic support. So you'd want to put you wouldn't want your stop loss here. You'd want it right here. There's logical places to put stop losses. You know what? All right, now that the chart's totally built and we're already moving along, I'm going to go ahead and stop this video, which will be part 2, and I'm going to start a part 3, and we're going to take it from there. We're going to go over this chart thoroughly.